Hello and welcome to the FI Newscast, where we bring you relevant news in the food and beverage industry. Today is Friday, February 24th, 2023. We have a great show for you today. Our special guest is Uday Ahuja, Chief Investment Officer at 𝗟𝗲𝘂𝗃 Ventures. You don't want to miss that segment. But first, here are some of the top stories from this week that we think are worth taking a second look. In food and retail news, Walmart reported strong quarterly sales on Tuesday. Total revenue rose to the $164 billion for the quarter ending January 31st. That's a 7.3% increase from the same period the year prior. And let's face it, everybody loves a good deal, and that is what exactly has kept the discount retailer in shoppers' good graces. However, as inflation continues to put pressure on wallets, they are making more thoughtful purchases, prioritizing food and other essentials. This leaves Walmart's 2023 outlook a bit uncertain as consumers continue to pull back on spending across multiple categories. Meanwhile, extra SNAP benefits boosted by pandemic funding are coming to an end in March. SNAP-eligible households in 35 states are expected to lose at least $95 a month, and some may be ineligible for food stamps completely. According to HSA Consulting, 2022 SNAP benefits made up 12.3% of total at-home food and beverage retail sales in the U.S. That's up from 7.1% in 2019. Food stamps make up more than 10% of dollar store revenue. Even with high-income customers trading down to discount retailers, it may not be enough to make up for the potential loss in dollar sales. In other consumer news, private labels had a record year in 2022. PLMA recently released a report stating that store brand sales had an overall increase of 11.3%, setting an annual record north of $200 billion. In comparison, national brands peaked at 6.1%. Looking at numbers over a month-to-month basis, store brands have continued to outperform national brands. According to PLMA, these numbers suggest that inflation and financial hardships are leading shoppers to choose lower-priced store-label brands. The report also indicates that retailers have been more innovative and responsive to health and wellness needs. In food manufacturing news, General Mills and McCormick all reported steady results in their respective earnings calls. The cereal giant lifted their sales estimates to about 10% compared to prior forecasts of 8 to 9%. Speaking at the CAGNY conference in New York, CEO Jeffrey Harmening said that price hikes have not changed consumers' desires for their products. The same cannot be said for spice and seasoning manufacturer McCormick, however. They've been seeing pushback from major retailers on their product prices, many of whom are concerned about margins and consumer reactions on these increases. And finally, Starbucks is shaking up the coffee world. 𝗟𝗏𝘂𝗃𝗀 is a new line of coffee drinks that are infused with olive oil. The line recently launched in Italy before arriving in the U.S. in the spring. CEO Howard Schultz describes the new product as, quote, transformational. Will this new drink truly disrupt the coffee category? Only time will tell. And those are your top stories. Now we want to bring in our VIP guest. He is the Chief Investment Officer of 𝗟𝗲𝘂𝗃 Ventures, a private investment firm that has acquired such brands as Magnolia, Bluestone Lane, 𝗏𝗏𝗡𝗂, and Ann Pizza, among other assets. He's here to give his take on the current events going on in the industry, as well as share his insights in restaurants. He is Uday Ahuja. Uday, welcome. Thanks for being here.
Thank you for having me, Susan. It's a pleasure to be on your show.
All right. I got to ask you first, olive oil coffee, yay or nay? Would you try it?
Well, we'll try anything, right? But let's see if it resonates with the consumers. I think one thing I've learned over time is it's not necessarily what my tastes are or what our team's tastes are. It has to resonate with the consumers at the end of the day. And clearly, Starbucks has found something that they believe will, and I'm excited to try it.
Spoken like a true chief investment officer, always on. All right, I'm not going to waste any more time. Let's get right into it. I want to hear your take, your professional take on some of the current events we covered. Starting off, how is inflation affecting the food industry from what you're seeing? You know, we heard, the news items that I ran through, Walmart, they had a strong, previous quarter, but, they're really reticent about, predicting a strong outlook for this year. You have that PLMA study, store brands being preferred, generic store brands being preferred over national brands, shoppers showing that concern visibly with their wallets on spending. Uday, what are you seeing from where you are?
Yeah, absolutely, and it's sort of front of mind for everyone, not only for grocery shoppers but restaurant shoppers as well. I was in a restaurant the other day, and just tells you how much inflation is on everyone's mind. It said on a sign up there, due to inflation, the 5-second rule is now the 10-second rule, which I thought was pretty apt and telling of the times. But just switching gears to Walmart, I think it's indicative of the value proposition that Walmart provides and the fact that they can attract shoppers from all different segments. And they will continue to benefit through this year, and while inflation remains up, because I think inflation is sticky, it's going to be around for a while. So as businesses, we have to be prepared for that reality, for better or worse. The beat of same-store sales last year was driven by both price and by traffic. And I think that the positive news is the traffic from the perspective of Walmart, right? If it was only price, then you'd sort of look at it and say, okay, but what are the underlying sort of fundamentals of the business? And I think the traffic beat is actually interesting from a Walmart perspective in particular. And even though the guidance is a little lower, I think they're being conservative given the uncertainty of the environment. But they will continue to gain share as more consumers look for value with the macroeconomic environment. And I think when you think about sort of that value and how it translates across the industry and the segment, as we think about restaurants, I think there's going to be a tremendous focus from consumers looking for those value deals. And so what does that mean when you're a restaurant and are offering pizza, for example, right? To be able to bundle more things together, grab a Coke with your pizza for, X dollars more. So I think consumers are going to continue to search for value, whether they're at the grocery store or at the restaurants, given sort of the inflationary environment that we're in at the moment.
Right. Thanks so much for those insights. Very interesting to hear, dovetailing off, continuing into the restaurant sector. We at FI, we recently saw that news item. A lot of restaurants interested in or rumored to be interested in going public, doing that IPO. You've got 𝘂𝗶 Group, you've got Fogo Hospitality, you've got Panera Brands. They've all been in the news as rumored to having interest in releasing an IPO. You also have Subway in the news recently, right? Positioning themselves for a sale. Tell me, Uday, what's your take on that? What is it, about this trend that we may be seeing about restaurants, wanting to put themselves out there like that?
Yeah, it's really interesting to see, given sort of the state of the markets holistically. As in 2022, proceeds from public listings across the board were down 94% relative to the prior year. So, the reopening of the IPO markets and the public markets is hugely important for companies that are of the size that you mentioned, and to be able to take the next step. And what does that mean? It means being able to raise capital for growth, being able to sort of provide employees and investors liquidity who have been in the business for a long time. There's a multitude of reasons to go public. Unfortunately, you can't just choose to go public when you want to. So clearly, without sort of having insight into specifics of each of these companies and why they're choosing to go public, clearly you have to have solid fundamentals and foundations to be able to pitch the capital markets. Because in this environment where the public offerings are at a premium, investors and potential public investors are not going to reward businesses that don't have all of their stuff together. And that means strong same-store sales growth. It means great cost controls. It means great margins and a robust and predictable pipeline for growth. So all of those things are things that investors in the public markets will be watching out for with respect to each of those names. So I'm excited to see how things evolve from here. but it's an exciting time when all of these companies are therefore on the docket to be able to sort of go public and maybe hopefully open some of that logjam that's been around for at least a year at this point.
Certainly will be exciting to see all that activity as it unfolds in the coming days. You are right about that. Uday, thank you so much for your insights on those current events. We're going to take a quick break, but when we come back, we will have more from 𝗂𝗄𝗄 Ventures Chief Investment Officer, Uday Ahuja. Stay with us. We are back and we are talking once again to Uday Ahuja, Chief Investment Officer of 𝗂𝗄𝗄 Ventures, a private investment firm that holds multiple assets, including Momofuku, Fuku, Magnolia, and Pizza, Bluestone Lane, all of my favorite places in New York City. Even though I recently moved, I'm forever a New York City woman. Welcome back to the show, Uday. So let's get into it. Let's talk about 𝗂𝗄𝗄 Ventures. What is this company? What is your role in this company?
Yeah, thank you for asking. 𝗂𝗄𝗄 Ventures is a direct investing platform that was co-founded by Matt Higgins and Steve Ross, where we invest Steve Ross's capital. So in many respects, we function as an extension of sort of a family office, if you will. What that means is it changes up sort of how we approach investments relative to others who are raising third-party capital, like typical growth equity funds, early stage venture funds, etc. So we started back in the day as an extension of the Miami Dolphins with a desire to build and incubate and invest in businesses in and around the sports and entertainment ecosystem, which we did in our first few years of our existence. And the mandate quickly grew from there. Most relevant to this conversation, of course, is our foray into the consumer space, which started with our investment in the Momofuku group. And while sort of the qualifications and brand recognition for Momofuku, stands on its own feet with respect to their restaurant fortitude, we also saw the potential to go beyond restaurants and in sort of the omni-channel aspects of the business. But before we did that, we saw some other interesting assets that were part of the group. So we spun out Milk Bar, funded it, and stood it up as its own company. We did the same thing with Fuku, which is Momofuku's fried chicken sandwich concept, and most recently with Momofuku's CPG business. And that led our sort of foray into the restaurant and consumer space, where we have invested in some of the brands that you mentioned, such as End Pizza, Bluestone Lane, and of course, most recently, we completed the acquisition of Magnolia Bakery. As a chief investment officer of the group, it is my responsibility to help source, lead, diligence these investments, but it's not where it ends. Once then we have custody in terms of being a large minority owner, or in Magnolia's case, as I mentioned, the majority owner of the company. That's when we get to work and help companies sort of develop and evolve in their strategy and their growth plans, whether that means channel expansion or fundraising. It spans the spectrum. So we're involved intimately at a board level, but also as an investor actively in sort of each of these companies' strategic and operations focus of the business.
There is no shortage of work for you there. 𝗂𝗄𝗄 Ventures, as I mentioned before in the intro, has a an impressive portfolio of restaurant and consumer brands. David Chang with 𝗏𝗏𝗡𝗂, Milk Bar. You just said, and Pizza, another great, another great brand. I hear a lot of good things about it from my friends. Certainly a good sign. Tell me, Uday, what are some of the key things that you look out for, when you and your colleagues are, on the hunt for, a new investment?
Yeah, absolutely. I think part of it is stage driven, which is where we're going to come in, and let's talk about it in restaurant parlance, right? When something is 5 to 10 units and has proven its economics, not only past the first and second unit of opening, but across multiple markets and geographies, and then step in and provide growth capital that most of these businesses so critically need at that time to sort of take the next step in their evolution. For us, several criteria are very important. We love backing strong, passionate founders. And so therefore, more often than not, the strategy has to be founder-led, with a robust, passionate following, with sort of this fanatical consumer adoption behind it. The other most important factor that has sort of become even more prominent recently is the ability to scale. And that means whether that is omni-channel in nature, meaning direct to consumer, CPG, or just if it's a restaurant-centric concept, brick and mortar only, the ability to scale to 50, 100, 125 units. So is there an ability to be repeatable, consistent with performance across sort of a broad swath of markets, but also across locations and units? So those are a few of our sort of key criteria of investment. And I think as you've listed out some of our brands, hopefully you can sort of see the key thematic across most of them.
Absolutely. I mean, it's all about those margins. It's all about that mass appeal, and the portfolio you have. To me, it certainly seems to reflect that. I also want to ask you about the strategy that seems so unique to RSC Ventures: CPG growth within a restaurant category. We see that in 𝗏𝗏𝗡𝗂, where you just said, you've delved into a CPG sector. There was that release of the chili crisp, which certainly made a splash, as well as the new ramen product. You also see Milk Bar, multiple brick and mortar storefronts there. Want to talk more about, what's the process behind that? That certainly seems to be, something that no other company's investment firm is really doing, that kind of CPG growth strategy within the restaurant sector.
Yeah, I think it's a really important part of our investment philosophy and criteria is to be able to diversify revenue streams. And certainly, it was helpful to have that philosophy before COVID, and that only became more important and apparent through the pandemic. Milk Bar did phenomenally well through the pandemic, through its D2C strategy when bakeries weren't open, and other businesses in our portfolio as well. But having those multiple channels helps you diversify the risk in your business for events like COVID, but even subsequent to COVID, when direct-to-consumer businesses became very expensive to run, having the bakeries in Milk Bar open back up again and have the CPG channel were tremendously beneficial to the overall health and growth of the business. But to go back to the beginning in terms of why CPG, I think it works in certain instances and certain cases. Certainly, we do not force it upon our businesses, but that is an ultimate way to achieve scalability in a way, in a shorter duration of time, rather than go about and open, call it, 500 locations of something nationwide. So a CPG product is a way to bring something that is special from one concept nationwide in sort of a more scalable, efficient way. And that's really goes back to sort of what we were talking about, which is how do you achieve scale? And to the extent that you can do that via a beloved CPG product, that is probably the most economical way to do it in the long run. And again, you can't force it, right? The chili crunch, the noodles, the Milk Bar, ice cream, all of these products are beloved, and rightfully so. So the product has to fit. There has to be the right product market fit. And at the end of the day, the addressable market has to be large enough for each of these products. Otherwise, you're likely to have something that, is a niche product at best, which may not serve the overall goal of scalability that I was talking about earlier.
So scalability, the key word coming from this conversation with 𝗟𝗏 Ventures Chief Investment Officer Uday Ahuja. Uday, thanks again for joining us. This was great.
My pleasure. Thanks for having me.
All right, before we go, I just want to touch base on some events that are coming up in the food world. On Tuesday, February 28th, FI will have a webinar on the CPG industry covering key themes and an outlook for 2023. Also on that Tuesday, Target will release its results for fourth quarter and year-end 2022. And Wednesday, March 1st, we'll see earnings releases for Wendy's and Jack in the Box, while Anheuser-Busch and Hormel will report earnings on Thursday, March 2nd. Definitely want to mark your calendars for those events. And that wraps up this episode of the FI Newscast. Be sure to tune in to us again, same time, same place next week, where we will have a special guest. His name is Hunter Thurman. He's president at 𝗟𝗏𝘀, a consumer behavior insights firm. We'll have some great critiques from him. Don't forget to check out all the great content that we offer at www.foodinstitute.com. And most importantly, don't forget to click on that little subscribe button on YouTube. Thank you so much for joining us. We hope that you will see us again next time. Have a great weekend.